You've seen a lot of different business cycles, a lot of different economic cycles. How does the one we're in right now stack up to the ones you saw in the past?
I started my career on October 1, 1981, when 10-year treasuries were 15.8%. Yeah. Lived through the 87 and all that. I would say this is not a crisis like 07 or 08 or like COVID. It's kind of muddy, rainy weather in the economy. But our portfolio is doing very well. I think private equity as an asset class is still doing quite well.
You mentioned 81 here. There's been so much talk about folks who haven't really had to operate in a high interest rate cycle. We're in at 5% roughly on the Fed funds rate, a far cry from the 15 to 20% back during the Volcker days here. Yeah. What did you learn from that Volcker era cycle that can be applied to what we're in today?
Yeah, well, I came at the end of 13 years of stagflation. The stock market was lower in 1981 than it had been in 1968, and it was all about inflation accounting. The key to private equity today is take a safe business and build it. So private equity's really evolved towards a form of governance and business building, and if you take a safe company and have the skill to improve it, you can make money in all markets. But you can't just wait for markets to go your way and sit there passively.
What's been the response you've gotten as of late from some of the big institutional investors, primarily pension funds, and their embrace of private equity, which we know was pretty relentless over the last couple of years? Have they backed off at all from some of that?
I think private equity has really outperformed again in this last cycle, so I think it's been their best asset class. Their issue is everything else is underperformed, and so private equity's percentage of the pie gets bigger because the rest of the pie is shrinking. So that will adjust. They're adjusting for that over time, and then new investors are entering all over the world, and Asia and all parts of the world are entering the market. So it's still very much a growing asset class.
What's the opportunity, though, for something that has grown into a behemoth? I mean, when you started this business, private equity was niche, and it is now dominant.
Yeah, it's gone from, when I started, there were 20 private equity firms. Today, there are 5,000 firms owning 30,000 companies. We employ 12 million people. We're 6.5% of the U.S. economy. But that being said, it's just a form of owning a business privately like family shareholders, but having the skills of a big, sophisticated corporate group. So the combination of hands-on shareholding plus sophistication leads to good results.
I was trying to look around to some of the trends that we've been seeing in the PE space. There was a lot of talk about carve-outs and how that has become, at least for a certain pocket of PE, a real place where a lot of folks have been pushing.
Yeah. Well, we just did a big carve-out. We just bought a $2 billion piece of Perkin-Elmer, which was a very complicated, sophisticated carve-out. And it's a great place to be as a buyer, but you need to have a lot of sophistication to be able to create the company and create it from scratch. You need to really have a lot of credibility with the seller that you're going to do what you say you're going to do. But it is a good area for a buyer.
Does it change the complexion of due diligence that you would have normally done in the past?
Well, we had 10 operating partners doing due diligence on that deal and a team of 17, and we had months to do the due diligence because it just closed a month ago after we agreed to buy it last summer. But that's just in general, private equity is getting much more operational, and our firm's really stressing that.
Last question here. You talk about 5,000 firms or whatever it is now versus the 20 that you saw when you started. There's been a lot of talk about whether this private equity, this as an asset class, as a business, has gotten a little frothy, has gotten a little bubbly, because you have so many players all seemingly chasing the same clients and chasing the same deals.
Yeah. Well, I think the evidence is that private equity returns have just outperformed year after year. You would have thought in this last crisis private equity would have been the problem. It was actually treasury bonds were the problem, because it's a game of skill, and if you're good at taking a business and building it, it's a huge world. There's tens of thousands of companies, and there's still room for skilled buyers if you can build a business.